Okay, welcome everybody to this live stream. I think we're at day 8 of the webinar of the Congress, and this is the second broadcast of today. We had um, a good introduction to security already this morning by Crypto Penguin and Max. But this is the first public webinar, and we are joined by Kingfisher, and I have a Crypto Penguin with me here. Um, but before we start, there is an intro. From the Birb Nest, and we want to introduce another bird, and it's Kingfisher. And Kingfisher is a platform that tries to incorporate like all these different trading tools into one. But I'm sure they can tell us more about it themselves and do the introduction about what they are. And we're joined by M from Kingfisher, we're joined by Geico, and we're joined by 52K Skew from Twitter. Hey guys.
G'day.
Hey everyone, very nice to be here.
Hi, thank you for receiving us again.
Awesome. Could you tell us a short introduction?
So as people can, yeah.
Go ahead.
Oh yeah, so quick introduction. So Kingfisher, we are mostly working with institutional clients for market execution and work to execute their tranche for their own OTC deal or managing their asset under management for them. Trying to minimize the impact on the market and try to find liquidity from our research. And since 1 year now, we decided to open a little bit to the P2C market to provide a new alpha, where with aggregation of all the exchanges and everything is everyone is looking for recently and since a couple of years now, and trying to give our expertise to people for that.
Okay, and like you can still visit as a retail trader the Kingfisher website. So there are also some tools for the retail trader or not the institutional trader. What do you offer for those type of traders?
Right. So let me show you my
for the retail trader
quickly.
Yeah, sure, go.
So basically the Kingfisher, the way we built it was to really aggregate different kind of alpha created by many different creators, right? So Skew is one of those creators that built those amazing configurations. So basically this is, what you can see right now is a concentrate of alpha. You can see all the CVDs for all the different exchanges. Skew can talk about it much better afterwards, of course. But you also get the Kingfisher liquidation maps, of course. You can get the data play to analyze different kind of index, create index yourself. So there's a lot of different tools we put in this to try to, well, get the users to get the best decision possible in their trading, right? And to get the most out of their trades. Geico, I'm not sure if you want to add something about this. But I think this summarizes the Kingfisher very well.
Sure, yes. So as we started to provide new data,
your mic is cutting out, man.
Yeah, maybe you can take this over if he can explain the same stuff, or M, because the microphone is a little bit laggy.
No, sorry, we can hear you, Geico. Skio, maybe you want to explain, for example, the CVDs what we can see on this configuration?
Yeah, sure. So this is one of the cleaner representations of using CVDs, right? Which is not a exactly popular indicator, right? So everyone uses open interest and RSI and whatnot for representing oversold or overbought conditions or the right opportunities to scalp long or short or hedge, whatever you name it, right? With CVDs, you can actually see the makers, the market makers and takers directional flow. And with the screener, you can see the spot exchanges at the top and whether they're actually buying Bitcoin or selling it. And that identifies if the trend currently on like a 5-minute or 1-minute basis is better to long or short. And so you can see here a lot of spot exchanges are selling the pump. Coinbase looks like it has bought it.
Yeah, Coinbase bought it a bit, Bitmex also, but all the FTX and Bitfinex kept selling on the dump. And maybe we keep on going.
You can see on the volume delta at the bottom, the market executed orders. So it gives you notional value of what's really going on. And then
yes, so maybe take a small step back for the viewers who don't know what volume delta or a CVD is. What data does it display?
Basically, in essence, it is 1-to-1. So when you have one buy and one sell, right, that's what you need. And if you have 2 buys, 1 sell, that means it's more positive. And if you have 2 sells, 1 buy, that's more negative, right? And the more cumulative buying, that changes to more positive representation. So like green volume delta, that's more buyers at this current price. So more people are willing to step in than sell. And vice versa. And that also represents the the skew of the CVD, as in why it's in a downtrend or a uptrend.
Yeah. Could you zoom in on could you zoom in on one of those? Just any one of those, so we can kind of see it more clearly where the CVD is. What are you talking about? There's the line or the bars below?
The white line.
So the CVD is this white line you can see, right?
Mm-hmm.
This line is the CVD, and as the price evolves, the cumulative volume delta evolves along with the price, right? And it depends on how much Bitcoin was transacted at each price.
Yeah,
so
correct.
It evolves differently from the price, and you can see that you get some divergence in, let's call it price action, right? In volatility of those both curves, of the price curve and of the CVD curve.
Yeah,
basically, the lower the CVD goes, means the more Bitcoin was transacted at lower prices, right? Please correct me if I'm wrong. Of course.
Yeah, that's correct. So what we call it is the best bid, and the best bid is being sold persistently. So that means whatever current bid, typically on derivative exchanges, is being sold by all the algos that go on behind the scenes that actually price this market. And this CVDs is what pretty much tracks it. It shows you what they're doing.
Yeah, so it is like, in my interpretation, always it's a little bit about aggression. It's showing who's more eager in a market, and of course there's always that interaction with these limit orders. So you can't take CVD as an indicator separate. It's always in combination with the price action. So it's all about that interpretation of these two that can give you quite some information about what these players are doing. And I see on your platform you had different views and different exchanges in this view.
Yeah, click on the Bitfinex CVD for a minute?
Oh, yeah, of course.
Thanks. You can actually see when they were T-warping on this. It's pretty nice. It's like each individual significant drop with price, you can see they were selling spot. But then when it goes sideways is when they were taking profit on shorts. And then at the bottom here, they're TPing out of their shorts and going long. So that's why it's flat. It's because there's no more actual selling. It's just reached a equilibrium.
Absolutely. So it's only like bots arbitraging with other exchanges without your volume, right?
Yeah, yeah.
Keeping the price action, of course.
You can definitely arb with this.
For Bitfinex, I think it was in the last few days very interesting because they were leading the market down.
Legacy version of the software, if you don't mind.
Sorry? So as you say, the Bitfinex CVD has been very interesting lately, the past few days, as well as the FTX bot. So just like they kept on dumping and dumping and dumping, and every rally was just met with flat CVDs or like very slight dump before dumping in, right?
Yeah, distributed.
So it was actually just looking at those two CVDs, the past 2 days have been incredibly profitable. And when you put them, when you relate them to liquidations, so for example, let's take a liquidation. When you put it in parallel to liquidations, which is when those future traders who use leverage keep on getting, well, liquidated, right? You can actually optimize your positions and your entries very well. You're able to enter shorts on short liquidations, on high leverage liquidations, which typically represent the extremes of the market, right? When you have those very big wicks, either up or down, it's usually indication of, well, liquidations getting hunted. And most of the time, when you have such liquidation hunts, you can see big clusters of liquidation on the Kingfisher, such as the one you have here. So right now, short term, maybe we'll go to 58.4, go back to 59, capture those liquidations, and then resume the move down as the CVDs keep going down. Maybe actually we just hunted some liquidations.
Usually it's driven by, so if Binance futures and Coinbase are buying, that's usually enough to force an offside move. And by offside, I mean the highest amount of liquidity closest to price will get ran, which is typically a big liquidation move. And that could be into 58Ks. In my opinion, that's quite likely.
Let me see if I understand you correctly, okay? Because I'm not too much of the technical analyst here. So just for the sake of our audience, I'm going to see if I understand it correctly. So you're saying if you see a lot of activity happening on Binance, for example, then that means there's the tendency for the area of highest liquidity on Binance to for the price to go to that area?
Basically,
that level?
Yeah.
So right now, what's happening on Binance? Where's the liquidity?
I believe it's on the ask side.
Yeah, here we have two big ones. But the thing is, so it's always hard to say which side liquidations will go, right? Let me zoom in a bit. Okay, here we have two big clusters that have been present since the drop 2 days ago, since we touched that. We might go to this. So basically, liquidations doesn't really tell you which side will go for sure.
Okay.
It tells you if we're going this side, it's very likely we'll stop at this price, or this is what we're going to chase. So if you see price increase pretty dramatically now, well, let's not take this example, but we can see the CVD spots are going down, still on Bitfinex and FTX. Well, if we keep on dumping, then good stops would be in those, let's say, crevices, in the liquidation voids. So usually the price will go towards liquidations and stop at a different void. So we could go here, then pull back when we touch 55.3, pull back a bit, then go down to maybe 51, go back a bit. So it's always in steps, right? The way the price action evolves. And basically it just shows targeting liquidations, pulling back a bit, another set of liquidations, and so on and so on. And when you see big clusters of liquidations, such as this one, then that's where you have the crazy price action. This is where you have big wicks. This is where you have big liquidation cascades, which just drop like another few $100 and then up directly in the next 5 minutes, right? So this is why liquidations
like
are
the
so
53K
interesting and underrated.
Okay, so you're saying that I could
53K.
use this. I could use this liquidations map to find places to place my stop losses and take profits. And the stop losses, maybe I place them where they're. Behind the liquidity. You're saying?
Yeah.
Yeah. So
Okay, guys, can you hear me?
that's like basically, yeah, we can hear you. There's many ways to use liquidations, right? So it depends on your style of trading. Maybe you're more of a swing trader. Maybe you're more of a scalper. If you're more of a swing trader, then let's say you want to go long now. You think next year's going up. So just put some orders after the big clusters. Okay, you can have like one long at 52, one long at 49, one long at 45, let's say, and then just wait it out. And one day you'll get a week filling your orders, and you'll either be in profit instantly, or you'll just like wait a few days and then profit. Or the other way around. If you want to be short, just short 60, 65, and you will have like much better average than
the legacy version.
All right. So you're saying that if I want to catch the wicks, basically, this is a great way to do that, right? Just look at the clusters.
It's a great way to do it. And if you really want to catch wicks, then you use the order execution management system, which we have. Let me just quickly log out and back in. Quickly, it's gonna come. So the OEMS is Order Execution Management System, and basically allows you to build any number, well, depending on your subscription, any number of instances which will be trading and improving your execution on those instances, right? So we can connect to Binance, FTX, Bybit. And it's basically, well, we try to make it as simple as possible, but it's still a bit confusing to some. It's basically a few parameters you can tweak to optimize your trading, go towards like be long or short depending on your own bias. So you can switch it up right down here, of course. And depending if you're long or short, it will catch either long liquidations or short liquidations automatically. So if you say, okay, I think we're going up, putting long only, I put my trading size, my max exposure or minimum exposure, and then it will just like start scalping liquidations up or down, depending on your bias. But always get you the best prices and the best averages, given it will always hunt for high leverage liquidations and get you pretty good, well, orders and pretty good fills compared to the rest of the market. So it's really a all-in-all solution we try to integrate. Gecko,
you mean you have a tool?
To add something.
You have a tool that's gonna long for me based on the liquidity, and I don't have to like find the specific price level?
Absolutely. So you can see right now, so this is like some random instance. Okay, I'm running somewhere, I don't know. It's supposed to run on AVAX, on Binance, with some small trading balance. And basically I could put like here $1,000. I want a max exposure of 2,000, but I always want $500 at least running on this position. And I want a long because it's AVAX and it's obliterating all the shorts. Then I have my small summary, and so now I activate it. I need to put trading balance, of course. Activate it. And now it's just going to catch automatically all the long liquidations on AVAX and just like keep scalping my position between $2,000 and $500 on Binance on AVAX. Any time of the day, whenever there's something going on, it's just going to catch it and just ride it up. And if you're short, of course, you just switch it to short and it's finished. That's it.
Is it gonna TP and stop loss for me too, or does it just get the entries?
No. So you need to manage your risk, of course. So it's not. It's a very good question, actually, bringing me to a very important point. This is not a fully automated solution. So it's partly manual. You need to give it your own bias, and you need to make it respect your own risk management style and strategy. So for example, here this account has like $280. Maybe I'm comfortable with going up to 10x. So max exposure will be 2,800. And, but maybe I want at least like 1x exposure, so I can put like $280 min exposure. Then let's say I expect AVAX to drop at least 50% during whatever time frame. I can send an entry right here to half the price. I don't know what price AVAX is now, but let's say $50. And it will just enter, accumulate the max exposure within this window you gave it. So those $50 window, or until the fair enter price. And so scale in very well the position, get you great entry price, and then you can unload it either manually or it will take profit slowly, very regularly, to allow you to optimize a bit the exit also, of course. And it will also exit on short liquidations if you're long, for example. So it's always using liquidations for execution, giving you always the best price for entries or exits, basically.
And what is the...
Does it make sense?
Yeah, it does make sense. Absolutely. And I think, could you give us an insight in how often this system can execute based on all these liquidations?
So we have this article on our Medium. You can still see my screen, right? Presenting a bit while the OM is explaining how it works, setup guides and so on, explaining what I just told you, with a few example trades. So for obvious reasons, I can't really show you trades right now, but those are past trades that we took. It shows you the behavior, right, of the OMS. So you can see it often. Just take the wicks. Yeah, so those are some Bitcoin trades. We just take extremes, liquidations here. We have also some altcoin trades, a bit lower. Yeah, everywhere here, for example, even some illiquid instrument. You can always get, like, there's always a liquidation, in the market that will allow you to fill. That's where it's great. But of course, the more you increase your sizes, well, the more you have to be careful about the size of liquidations. But you can see it's really great at catching wicks, taking profit quickly. There you go. Those are like few hours trades all the time, or few days max.
Yeah, so the
but
platform
of course
is
we can't
really
give you.
good for day traders. Like
sorry.
if they're day trading and they are monitoring our platform, day traders can use this tool to have them at least give them some automatic entries. So they need to prepare, set these entries, set their tools, and then this can execute based on that. But it isn't really for longer term swing positions, right?
So you can do it for both. So we are the first users of our tool, of course. So we've been using this tool for like before even the Kingfisher existed. As Gecko presented us, we used to, and we're still dealing with a lot of institutional clients, and we're giving them those solutions. And you can really fit any style you have. So one way I used it, for example, was just setting long only on like the whole market. When you're in the bull market, it's pretty easy. Just make 20 instances on 20 different instruments. Go to sleep. When you wake up in the morning, your market close all, and you made like a nice 10% overnight. That's pretty good. But of course, if you're on the wrong side, then well, it can be pretty painful, obviously. Another way you can do it is set pretty low max exposure and just let it accumulate and scalp a position. If your max exposure is leverage 0.5, you won't get liquidated. It's just going to take some trades, take some longs, let's say, and just unloads them and continuously takes some, unload, basically market making for you on any time frame you're happy with. But we didn't offer, actually, at least it's not, you can't really do it high frequency, let's say, with the version we made online available. But you could also make it very high frequency bots, and we have a few nice things running on our side using it.
Okay, and I think that's where you tap into a really valuable point that these liquidations often happen at the extremes in the market. So if you want to enter for a longer term position and you don't really know where that extreme is, where there's a lot of that blood in the market, you can use this tool to get in a position because people get liquidated. It creates a lot of liquidity. You can enter your position along with other big players that are, scooping up all of the liquidity. And at least that's where you can get an optimal entry if you also timed it a little bit correct. But, from the liquidation point of view, the liquidity point of view, that would be an optimal entry if you, leave it running. And
Absolutely. I read one time this, I don't know if it's a quote or a sentence I read somewhere that was saying, when you take a trade, don't long your long and put your stop loss. Just enter your long where your stop loss would be and put your stop loss a bit lower. So of course you enter much fewer trades, but the trades you get are usually pretty good. And actually liquidations are this. Liquidation is everyone's hard stop, right? There's no stopping anyone more than his liquidation point. So if you just check where the clusters of losing positions basically are, those will most likely get hunted. And we shared some statistics a while back about how 100x leverage are cleared within 2 days, 98% of the time, or within 1 day, 98% of the time, within 2 days, 99.7%. So this is your lifespan if you're 100x Degen ape, right? But same, but 5x leverages are also getting cleared about, I think, every week or so. Most of them are getting cleared. It's also very often. So targeting those liquidations is a pretty safe way to trade, while not getting stuck in front of your laptop, looking at the order book playing out or some CVD or anything. It's just a much more stress-free way of trading, I think. And this is what we try to achieve for our clients.
Yes, and I think that's where a lot of these new traders get liquidated or get stopped out and then say, okay, I got stopped out, and then price reversed. And that's exactly because of that. They got stopped out en masse. So big groups of traders got stopped out, and that's where liquidity is, because they use strategies that are very basic. And I think they forget the market is a big game. The market is a huge game where it's one player versus another, one group of players versus another. And if you can have a smarter tactic than another group, that's where you can outperform. And they got stopped out because there is a smarter and better informed player. And I think this data is there for the smarter and better informed traders.
Yeah, absolutely. But the way we're trying to make it is we're trying to bring those tools and those interesting insights to everyday traders, right? Not only to big institutions with 10 people on the floor doing analytics all the time, but actually have actionable insights, which is actually artifact, let's say. We're only putting on the Kingfisher tools we can use and we're using, right? We try to not clutter it with useless stuff. This index builder is incredibly powerful also. Not sure if you had the chance to play with it. You can very easily find outperforming pairs. For example, right, I had an example I wanted to show.
So
I
why are you
can
saying that
talk about it if you want, about comparing different pairs, since a lot of people on Twitter do it.
Yeah, I think you could do that. Please go ahead.
Yes.
I just want to do a quick recap first just before we move on. So some people are saying that they have been having trouble understanding. So just a quick recap, right? So from what I'm understanding is this doesn't give you the long short bias necessarily, okay? But just say you look at the market or you look at the fundamentals, you look at the TA, and you think, I think I'm going to go long in this situation. Then these tools can help you figure out where the best places to go long are. You can also automatically get the good entries at places where you can go long, and then it can also tell you where probable or good places to get exits are that are enough to get good liquidity when you exit, so you don't push the price too far up or too far down. And this is what big players need to use, because they're not playing with $1,000 or $200, right? They're playing with maybe $100,000, $1 million. So if they want to enter, if they want to exit, they actually have to. They can't trade like you or me. They have to use these techniques and find where the liquidity is. So it's actually also likely that when these institutions, we actually have a lot of institutional attention, if they're going to want to enter, this week, next week, next month. So if you're patient enough, right, you can just wait to enter when they enter, and then you probably have we have a saying in Thai. It's like if you follow the adult, the dog won't bite you. So I guess if you enter with the big players, right, then you have some protection there, right? That they're gonna protect the position probably. So it's a better idea for you to enter along and exit along with the big players.
Absolutely, and if I may add, sorry, not only it's good to play along with the big players, but so for big players, of course, it's interesting to target those liquidity pockets to enter with the least slippage possible. But the thing is, once they made the market deviate enough to catch those liquidity pockets, which basically makes outlying price actions, right? Becomes outliers. It's not, let's say, in the normal distribution of the price anymore. Once they push the market enough, it takes some kind of energy, right? Monetary energy to push the market one side or the other. So once they went through and captured a big pocket of liquidity, then that's why you have those, violent spring back. And then it just jumps back up. You have this 5% candle, 5 minutes. That just goes right up because, well, everyone's buying it and there's no more liquidity, right? So it's very interesting to see also very low time frame what's happening during those events.
Right. Yeah. So once the big players, once the big player has their entry, I guess, if some people are saying, hey, these big players are manipulating the market, they're keeping the price down, they want to get their entry. Maybe sometimes that's true. And then if you enter when they enter, and they're satisfied with their entry now, then that's when they stop pushing, they stop manipulating the market, they stop keeping the price down, and that's when you get your 80% in 24 hours, and then you think, wow, this guy's so lucky. Well, maybe he's been looking at the liquidity and reading what the big players are doing, and that's how he's doing it, and it's not just luck.
That's basically how I trade. Yeah, 100%. That's literally all you need to do is follow what the much larger players are doing, because like you said, they're going to defend their positions with more money than whoever retail wants to do the exact opposite, since this market is extremely predatory. Right. It's quite efficient.
Very predatory.
But you can't do that just looking at the order book on Binance or on FTX, right? So that's why we're showing you these tools here, so you can get that advantage that most people don't have.
Yeah.
Absolutely.
And
we have also
something I'm doing is doing a write-up in each of these tools, since they are quite complicated at a base level, and you need specific steps, like almost a thesis to why you're going to long here, and what conditions, what signals are pushing you towards going short or long. And that could be extreme selling, like lows, right? So a trap setup more or less, and that's very high delta volume.
Oh,
And you
okay,
can
guys.
see-
I think I've been able to join the the conversation again. Let me know.
Yeah,
I'm
it
with you
works.
guys.
We hear you now.
All right.
Yeah, it works.
All right. Really happy to be here with you guys. So sorry everyone for the voices. So as we said, we have for security reasons some mistake to do that, but I will be with my clear voice and with you today. So I wanted to present you as well the legacy version that might be easier for a quick tour and understand really quickly what we're doing, why we're doing it, and how you can benefit from working with us today, and not, no need to go really far, really complicated stories. We will just go back to the basic and where we started to build this tool and why we did it. So what you can see right now, just let me know. Can you see my screen properly?
Yes, I put on your screen. This is yours.
All right,
Yep.
thank you. So what you can see right now is the chart, 1 second time scale, 1 second time frame. So as you know, the main tools that everyone was using since many years now was mostly TradingView, basically, right? And most of the people were trying to build indicator and something called stochastic indicator. So most of these tools have all the same weaknesses. It's like, because the price is moving, right? What you see is the past, not the future, right? So we took the other way around, like what's going to happen based on the market architecture, right? So when you are in a market driven by the derivative, like it is for crypto, with a spot market that is led by almost OTC dealers, right? Like 95% of the spot volume is done by dealer only, market making firms like FTX, Alameda, stuff like that. You then turn to a market that is driven to find liquidity and that is kind of engineered for the people. So we provide a way to understand how the market architecture derivative is going to lead the market in the next couple hours, days, weeks, depending on what you're looking for. And so something we started from Bitcoin only when BitMEX started a couple of years ago, right? It was the only derivative market creating some coin margin swap. Like convexity creates something really interesting that everyone should know about, is that if the market is collapsing, let's say 20%, right? And you have a long position, how much do you lose on a $1,000 position if Bitcoin price is 1,000? I'm asking you guys, how much do you lose?
More than the price decline.
Right, because the collateral lost value as well. So you lose twice. You lose 40% in one trade. So because of this convexity, if you add the fees and the leverage, you get liquidated pretty quickly. And now, since 2018-19, in the bear market, many exchanges decided to create a linear contract based on USDT. But this implied that the people who are shorting Bitcoin nowadays, they get a linear loss, which means they do not benefit from the convexity at all to protect themselves. And they get squeezed, basically, really faster. And Binance became one of the leading exchange when BitMEX was in a trial with the courts, with the SEC and the Department of Justice in the US. So from that, the architecture of the market changed again, right? And we moved from a convex margin contract that was biased skew to liquidate the long positions to a biased skew market that is based to liquidate the short position. And with a lot of influx of capital and a lot of OTC dealer having the hand on the BTC and make sure that no whale can sell anymore because everyone do KYC nowadays. If you want to dump $100 million on the market, you have to go to the exchange and they will literally front run you first, right? And from that, and the liquidation we propose, like you see right now, this is a cluster you can trade yourself, I guess, today or the next following hours. If we pass 58K, right, we have a liquidation cluster that will smash the book and all the linear contract will be squeezed from the bottom at 56. And we might see some relief at close to 60, right? People will be like, okay, that's a bull trap. About to short again, boom, second wave. This is what happened yesterday or the day before. Like we were tweeting about it, explaining to people what's going on, trying to give them some alpha, right? And I think people deserve a little bit of it with you guys. And the basic tool everyone can use to just understand how things are going to move against them or with them is just trying to click on the price like this and see what's the liquidation price of the different basic leverage everyone are using on the market. And just from that, you can already have a small picture of what's going on. So let's say this was a bear trap, right? And they try to attract some retail. Boom, you know that's in a couple seconds, they're about to liquidate them. You get some X100. And if we listen to the liquidation tape, I guess we can have it here. And I don't know if the exchanges are showing, but we should get some about here, starting. And then we move on many new features that were related to gamma exposure of the dealer and the option market that is moving really far. From what we understand, the Bitcoin market and all its derivatives are about to change again from a peer-to-peer spot market where people were playing against each other with huge slippage since 2014, the old years, to coin margin skewed against the long in BitMEX generation, 2015, 2017. Then we moved to a linear contract-based architecture, 2017, 2018, 2021, to an OTC-based option market, where the gamma exposure create high movement, high momentum, right? And at the opposite, you get this bleed, this volatility bleed that's going on. And the purpose of that is to sell volatility. Like if you look at the realized volatility of crypto, you can see that it's below 50, something like that, 60, sorry. Why the implied volatility is still really high, you can understand that the dealers are really good at selling implied volatility in crypto. They know how to fairly price that because the big money now, the big guys, are here to take your money, right? And they are not taking directional bet. They're using more complex and structured portfolio, and they bet against you. So if you want to benefit that, what you can do is just look for the liquidity, right? What's happening? Like, what's the toxic order flow is going to start? When it's going to end? Where can I try to go in? Like, you can be taker, right? You can buy 58 and be okay, go 58 to 62, and then I exit. Boom. Now you get $3,000 trade. You can do directly. Now, if you are trading on a more sophisticated version of it, you might need to go and have tool like us because we provide it for all the exchanges and everything. So let's say you have 1,000 positions and $1 million. I don't know. You might need to change a little bit and custom some strategies. Like say, okay, I want to buy, to sell. What do I want to do? And then we've developed this new version where people can join and build tool with us.
Yeah, so I think there was a really interesting fact which you touched upon on the Bitcoin market. You said it's going towards option based, it's going to OTC, more delta neutral strategies, and I think for a lot of these viewers this is quite new. Could you elaborate a little more about what that means? About volatility going down, about the options market that's becoming more and more important in crypto.
Right. So what's volatility? How do you trade volatility? Most people are trading it with option on Deribit because it's the biggest dealer and the OTC desk behind, which is a Paradigm. And these two big guys provide mostly covered put or covered call, which means that you will buy or sell a call, and then you will buy or sell future to hedge this position. And depending on the delta you have, you will have to buy or sell. And if you have many people using the same strategy, you can have impact on the market. So this is where we have the GEX, which is a tool to understand what's the dealer exposure. Because when you buy or sell an option, like you have 99% chance that you are buying or selling to a dealer, okay? A professional guy who is market neutral and don't care about the market direction. All he wants is to take your money, keep the premium in his pocket, and that's pretty much all. So if you ask one of the biggest dealer in town, he would say that this indicator is worthless because there is much more to understand. And I kind of agree with that. But on the other side, I think it's good to have it in mind. Like if you see that the market is skewed to lower liquidity, higher of 75, you can guess that if we have any rally, market will stop at this price. And all the people who are buying a lottery ticket right now to get into crypto at 50K will get a lottery ticket, but they won't get any 100K this year at all. No chance, less than 3%, I guess. And on the other side, if we go down, the liquidity will increase and the market will slow down, but continue to bleed because dealers have all interest to sell down back to the beginning of the bull run to capture this volatility for the next following years until they unwind and the market resume.
And is this mostly relevant for Bitcoin, or some people are also more interested in Ethereum? Could you do something similar for Ethereum on your platform, or
the main point that matters about that is the liquidity available. So which means that today you have a strong option market for Bitcoin that is going forward every day. But Ethereum market is not that big for options, so it doesn't have much impact yet. And for the shitcoin, there isn't much to say at all about it because there isn't any market yet. But this might change. Like this is where the crypto market is going to move to the next architecture, which will be Gamma Brawl based on shitcoin. So people will be able to buy some Robinhood YOLO call to buy some Send 10x, right, in a couple days. And people will bet on that, right? And if you're able to detect what's the dealer position and how much they have on hand, you can have a one step in advance from them and go in the directional trade yourself, following the whale. That's the idea. Follow the whale, follow the money, make money. That's how you make it.
Agreed.
Yeah, and that's, I think, a good conclusion about your platform, because your platform helps us identify what the bigger players are doing. And we call them whales, and most of us are smaller fish, and it's either you swim with these whales, so you swim next to them and trade next to them in that trend or in that move, or if you're in front of them, you'll get eaten. You get stopped out, you get liquidated.
Yeah, so, I think one of the best examples for that, and I think I will conclude about this, I guess, it's Bybit and FTX. What you want to do is follow the smart money and avoid following the dumb money. So let's say you see a positive CVD on Bybit, which is almost always the case, like here. Today we have 100, you see, it's positive CVD for Bybit, while on FTX it's negative. You can guess from that where the price is going to move, just because Alameda is providing some liquidity there, and if you're trading on Bybit, you are providing liquidity. Basically, you are the food. You have maybe a couple BPS chance to be in the money, but if you don't hedge instantly because you are quoting as a market maker, you are getting paid to be food. People don't understand that. If you're getting paid for the fees, it means you are the food. That's the thing. And so this is a really amazing tool that's been developed by one of a guys working with us recently. This guy is really amazing. I have no words to say about him, but like Skew, who have been doing amazing work on the configuration you can get on the bazaar, and I would really recommend you to spend a couple $1,000 just for that. Like you have to pay maybe $50 for a year. I don't know. It's pretty cheap. And I think this is one of the best tools you can have on the market right now. No one is providing this. And we have the liquidation map and stuff like this, but it's more for institutional players who need high amount of liquidity. You can use that for your toxic order flow. And the last thing I wanted to talk about is the V chart. This is what you see right here. This is volume-based charts. So you can see exactly if someone is buying or selling on a short or long time frame. So you can see here, they are strong buyers. No one is selling at all. And you can expect a huge rally in the couple next hours, if not today. That would be really interesting to see.
It's
Basically, what this chart is showing.
Right.
Sorry?
Like the way it's filtered is through BTC, like physical BTC, isn't it? On VChart.
It's FTX.
Yeah, so the VChart is pulling that up from FTX right now. But the way it's built is very interesting. It's building candles not in time, but in volume, right? So as you can see on Gecko's screen, it picked a volume of 219. So basically, each of those candles you can see represent 219 Bitcoins.
Squeeze is starting right
So
now.
you don't have this notion of time anymore, but you have the notion of time in the size of the candle. Right, the thinner it is, the faster we actually filled 219 Bitcoins. So you can see at each price level how filling those Bitcoins, those buckets, is happening on the market. And this gives you very clear indications of exhaustion. For example, accumulation. You can see when whales are like taking positions, you can see that all this slippage is very interesting.
I'm buying the Burj Khalifa, and the squeeze is starting right now, as I said. So we just hit 58K, and from that, I think we're going straight to liquidate 59, maybe some relief, and then 61. And that's the leading for today. Maybe we get a lower low, but I think that we might have hit a bottom. We have strong buyers everywhere. CVD is moving, and the most informed trading flow is buying everywhere. So I don't know if people want to short, but I wouldn't. That's my point.
Well, that's, I think, a good tip for the end of the webinar. Don't short in the next few days until we reach 61. And I think we'll have to conclude this webinar. You have a very big platform there with lots of information, and I think people just should check it out. Check out your Twitter. Because as you said before, you're sharing a lot of information, a lot of charts that help you understand the platform even better. So yeah, thank you again for joining our webinar. It was a little bit harder to understand because this is very detailed information and especially more institutional knowledge. But you're definitely bringing that to the public. So
I'll make some content that'll be more retail Twitter friendly, or anyone really. So videos and meetings, how to use each tool, configurations, what each thing.
So just to
means.
summarize, real quick, where can people follow exactly the website, Twitter account?
Go for the Kingfisher online.
So you can go
find us
on
everywhere. Yeah,
absolutely. Just Google it, or on the Kingfisher website, you have all the links to our Discord, our Telegram, the Twitter, and Medium. There's a lot of content on the Medium, on the documentations also. It's very important. Read the doc.
Okay, so that's
and we're actually very accessible. So if you have a question, just drop by the Telegram, ask a question, and we're always here to answer.
So that's thekingfisher.io?
Correct.
Yeah, absolutely. And the other one, and you have the link to the alpha version on the top left. Okay, so you can switch between both versions.
Ski, where can people follow you?
Just Google my name and the word Twitter. So 52K Skew, and then Twitter. It should come up on Google.
Okay. Right. So you can go to the Kingfisher website to get more information from them. Join the community if you have more questions. Follow Skew at 52K Skew. Make sure you join our trading congress at thebirbnest.com/500K. We have a lot of educational streams every single day. We still have another week to go. Make sure you've joined the giveaway for this stream. We have a month of exclusive Nest Club subscription for free. So join that. The link is in the video description of this video. The code is below your screen right now. Enter that code at the Gleam link, and you'll be able to enter the giveaway. All right, and that's it for today. Thank you for joining us, guys. And let's head out to the next. Bye, guys.
Thanks a lot for inviting us.
Thanks.
Thanks a lot, everyone. Cheers.
Bye bye.